All right, Lagos, it is 16 minutes gone past 5. You are tuned into the marketplace. And on the marketplace today, we'll be taking a look at inflation and seeing how it measures the rate at prices, at which we have goods and prices, and seeing how they've also risen. We just got the latest figures for August within the past hour from Bureau of Statistics. And in August, the headline inflation continues the slowing trend, coming in at 20.12% from 21.88% in July. It just shows that inflation has been slowing since April. But whilst it is, as I say, you only see these things in books, right? You keep wondering, are people actually seeing this thing? Are they feeling it? You say you only hear about it in the news. It's not really something you can relate to. So we'll be talking about all that. Also, what the Monetary Policy Committee will likely do if inflation keeps getting slow at this rate. Well, my guest will definitely be sharing her insights and how we can, you know, have better knowledge of Nigeria's decelerating inflation. And my guest is Ikeoluwa Alabi. She's research analyst at Afrinvest Research and Consulting. Good evening. Glad to have you.
Hi, good evening. Thanks for having me.
Okay, I hope your network is a bit better. Anyways, Lagos, you also are part of the conversation, right? In case you're wondering how to join in, the number is 0911 999 0911 0911 I'd love to hear your summations, your thoughts, how these the figures that we'll be talking about the figures. We'll be talking a bit about how things have panned out so far. And if you are also experiencing it in any shape or form. Okay, let's get into the conversation because the headline inflation in August, like I said, was 20 is in August is 20.12%, and it continues the trend we have seen since April. April was 23.71%, May 22.97%, June was 22.22%, July had 21.88%. What do you make of the trend? Is it something good? Does it portend good? Or does it portend like, okay, we need to be wary and tighten our belt to do something?
Yeah, well, it's not just good, it's actually a very impressive drop. I
Okay.
mean, like you just said, we moved from 23.7 in April, and now we are now in 20.1% in August. And when we analyze about that, more than 360 basis points decline of, let me just say, decrease in 4 months. And when you look at the trend in years, I would say that's
Mm.
like the sharpest we've seen in years. And it's really, like I said, it's a really impressive drop. And this drop is actually a combination of
Hi, Ikeoluwa. Mm. Technology doing a one-up. I hope that it will connect back so we can continue our conversation. Well, we're still talking about the trend, seeing how inflation is on a downward spiral. Hopefully, we'll be able to get
I
Ikeoluwa back. Okay, welcome back.
sorry,
Glad.
my
Yeah, you can.
network is not
You,
so fine.
and I'll suggest maybe you just turn off your video so maybe the audio will be a bit better.
All right, okay, thank you.
Try that and see how that if that will sustain us.
Yeah, okay. So like I was saying, I said it's the decline from 23.7% in April to 20.1% in August is actually very impressive. And it's a combination of different factors, that have contributed to this deceleration. We have
Mm.
the tight monetary policy stance taken by the CBN. We also have the FX reforms that the CBN have put in place to stabilize the naira. We also have the seasonal food supply improvements. I mean, we have some seasons where the food supply has been improving. And so if I mean that actually, contributing to the deceleration that we are seeing. Although it's important to note that there's still caution in the air. We are not entirely out of the wood. This
Okay.
trend is still kind of fragile. Inflation is still double digits. And when we look at our targets for the year, 15%, that's according to the federal government budget. The target is 15% inflation for 2025. So we are still at 20%. It is still well above target. And many of the drivers that are actually driving inflation in Nigeria, like insecurity, logistics, so
Mm.
imported inflation are still in place. All these are
Oh,
structural, all these are still in place. That's why I'm saying that we are not entirely out of the
out of the
woods. So
woods.
exactly. So there's still a place of caution. Yeah, so that's
Okay. I'm glad to know that it's not all hunky-dory. We still need to be mindful because anything can change at any moment, especially seeing that there are other factors, there are other players in this space. So we need to just be mindful. All right. But what has been the trigger for the deceleration that we've seen so far?
okay, so well, a lot of factors, are triggering this deceleration that we are seeing in inflation. It's
Okay.
This deceleration is the outcome of deliberate policies that have been put in place.
Mm,
First and foremost, we have, I mean, a few months ago, the Bureau of Statistics, they took bold step to rebase not just inflation, also GDP. So, I mean, that is an important factor is driving this deceleration that we are seeing in inflation. Now the base year has been, brought closer. The base year is now 2024 instead of 2014 that we're using before. So that's one of the factors. Another factors
okay.
coupled with the rebasing, we have the base year effect from last year. Then, like I mentioned earlier, the CBN's hawkish stance, for quite some months now, the CBN have, kept interest rates elevated. So this elevated interest rate has helped mop up liquidity and also tame speculation, especially around FX in the markets, which brings
Mm.
us to the conversation of FX reforms for quite some, I mean, as of today now, reports reaching me, the FX, I mean, the Naira has touched around 1,496 Naira today. That's
Oh,
very impressive.
okay. That's
Yes, so
impressive.
FX reform, exactly. So the FX reform that the CBN have put in place, the policies intervening in the
Mm-hmm.
markets, the platforms that they've put in place have also improved transparency in the foreign exchange market, because FX is actually a large driver of inflation in Nigeria. So now that we
Yeah.
have stabilized Naira, so we are seeing this deceleration in inflation. We also have the food supply factor. Now, the rainy season has also, boosted harvest of some of these staples like rice and
Mm,
maize. This has led to a temporary softening of food prices. So these are like, it's a combination of deliberate policies that are triggering this deceleration that we're seeing in inflation figures.
mm. That is actually good stuff. And you're right, because we've had well, we've had harvests and we've seen how food, which is usually the one thing that any Nigerian would use to assess or value anything. There's some
Exactly.
certain items that were, in a sense, no go area. You wouldn't even want to touch it. But
Mhm.
now it's
Mhm.
all over in the market. It's just okay. How much of it can you afford? And the quantity is basically up to you. But is it available in the markets? Definitely is. And that is what we've been looking at for. And now we have that.
Yeah.
So let's talk about the Naira stability. Um, you've spoken about how the CBN has made well, the whole dollar thing. We've seen it's having its impact. So would you say that this is also contributing to the fact that inflation numbers are on the downward spiral? I know you alluded to that earlier on, but is that all, or is there more to this?
Yeah, like I said earlier, Naira's relative stability has contributed largely to the deceleration that we are seeing in inflation figures. I mean, like we all know, Nigeria is a largely import dependent country. I mean, when we look at
Mm,
most of the things we use are actually imported. Now, over 70% of the inputs that we're using is in manufacturing and in agriculture, from fertilizer to fuel itself, about 70% of all this. So now when the Naira is every part of that value chain. I mean, is it from the
also goes
fertilizer
down.
you're using? Is it from the input you want to use on your farm? So every part of that value chain suffers when the naira is volatile. Transport costs also rise,
Mm,
and the result of all these, you the farmers or even small businesses, they mark up prices aggressively because they are afraid of future losses. I
all
mean, you
right.
see panic selling. I mean, you see panic prices. I mean, you see people putting just trying to hack prices just because of naira is volatile, so they don't know what would happen in the future. So now the stability that we've seen,
Mm-hmm.
for let's say since that we've been seeing in the FX
Right.
market now as calmed inflation expectations, and as a result you see that business now plan better. I mean, there was a time where you just wake up, you see that, oh, naira is already trading at 1.6, then the next day you see that it's already trading at 1.8. And how do you expect businesses to plan? They just start panic pricing. So but now that
Right.
we have stability FX markets, that they can plan better, and importers are not even, I mean, at that point when the naira was very volatile, you see that people were,
Panic.
and also
Yeah. Panic
exactly.
buying. And
So
then
now,
when okay, let me let you finish. Go ahead.
okay, yeah, and the speculative pricing has also slowed down, both in naira and both in, I mean, the prices of whatever we want to get. So those are
Mm.
the factors.
Yeah, I agree with you because then you'll hear, oh, if you today's price is not it's not yesterday's price, and it was really ridiculous. Even for the minutest things that you buy, you go to the market today, it's a different price from what you bought it yesterday. Or I mean,
Exactly.
let's not even go to yesterday. Maybe you bought something in the morning, by the time you come
Mhm.
back in the afternoon or evening, they tell you, sorry, that price is different, all because it was
Yeah.
just volatile. It was going in and out, and it was actually just making people want to lose their minds. Well, you're still
Mhm.
tuned into Marketplace here in Smooth 98.1. And well, basically taking a look at inflation and the rates and prices as it translates to your everyday goods and services. Is it something you've been impacted, has impacted your business in any shape, form, or manner? I'd love to know. Is it something that you've had a breather from or of? If your business has been impacted, I'd also love to know. If you want to share your thoughts, WhatsApp is the platform. The number is 0911 0981 0911 Share your thoughts, your questions as well, and your observations. If there's anything you've observed that you want to share, please, by all means, do so. Let's take our first breather. I want to get back in. We'll be talking about how the inflation is actually affecting market prices. And I say market prices because sometimes it feels like there's this disconnect between the inflation prices and the actual prices in the market. But we'll talk
Mhm.
about that when we get back in. Right, guys, don't move a muscle. Stay here. Stay on to Smooth 98.1. So quick, just a minute and we'll be back in. Let's take a message. Yeah.
Relaxing comfort on board with our world-class hospitality. Explore up to 6,500 channels of entertainment and stay connected with free Wi-Fi. With daily flights from Lagos to the Chinese mainland via Dubai, you can enjoy convenient travel that fits around your business schedule. Fly Emirates. Fly better. Decimal. In fourth. Next. Oh, market.
All right, Lagos, it is 31 minutes gone to spark. You're tuned into the marketplace here in Smooth 98.1. And like I said, today we've been talking about the inflation, all the triggers, and everything in between. What has it impacted your goods in any way? And are you actually seeing a reflection of the decline? Well, you can share your thoughts this evening. WhatsApp is a platform 0911 That is the number you get to share your thoughts on. Let's get further into more interesting spaces. And in case you're wondering who I'm talking to, my guest in the person of Ikeoluwa Alabi. She's a research analyst at Afrinvest Research and Consulting. So she's been giving great insights and all the interesting things we need to know. Well, for those who are looking at investing, looking at getting things on the way, if you're in this space, you want to be here to get all the insights. You will be very helpful. All right, let's talk about the markets now, the actual markets, the way it will affect you, the average, let me say the average Nigerian, because when it comes to an average person on the street, they'll tell you that the prices are still high. They cannot understand because the prices they are telling them, yeah, you're saying that, what does that even mean? It seems like there's a disconnect where it comes with the slowing inflation figures and then the actual prices in the market. Yeah, you can go ahead.
So I would say that there's actually no disconnect. The issue here is just the misunderstanding of what inflation really is. I mean, a common man on the streets, when you tell them, oh, inflation is going down, they expect that, okay, so the prices of whatever they are buying should, go down as well. But that is a misunderstanding of what inflation really is. Measures. So when we say inflation is the rate at which price increase. It is the rate at which price increase and not the actual price themselves. So we are looking at the percentage increase in prices and not the actual prices themselves. So when we're talking inflation, if you buy something at, let's say, 100 naira yesterday and you go to the market today, they tell you it's 120 naira, that means increased by 20%.
Right.
So not that you or okay, so now maybe in the next day you go, they tell you it's 130%. So it's a difference when you go to the market today, you buy something on, I mean, what the layman is expecting is, okay, inflation is down. Okay, so when I go to the market tomorrow, I should
buy
buy
it for 5 naira now.
Exactly. So that misunderstanding is actually there. So if we're seeing inflation 4%, it means prices are still rising, just more slowly. From 24 to 20 and from 24 to, let's say, 22. So that prices are still rising. It's just more slowly.
Not in that, yes.
Exactly. So for the average Nigerian, like I said, it's almost like there's no change because they are still paying record high prices they were buying. So it's not like there's no change. But in reality, when we come to the analysis part, there's actually slight changes. So another analogy that I would like to use is, when you're climbing a hill now, a mountain, probably when you slow your pace, you are still climbing. Do you can say? because you slow your pace does not mean you're not climbing.
You won't
You are
get to,
still
yeah,
climbing.
still climbing the mountain until
Exactly.
you get to the peak.
So
Then you
that's
know that,
how,
okay, I've reached my destination.
exactly.
All right.
Exactly. That's how inflation is. So prices won't feel affordable, really. I mean, right now, until we see, I mean, to the common man, to the average man on the street, they will still see that prices are still going up until maybe we get to a very low level in the inflation number. And also when income or wages, when they catch up, that is when we say, okay,
Right.
that disconnect that maybe we think there's a disconnect, you see that the gap would close. So that's
Mm,
it.
I like that. I kind of believe that that's what they're expecting. Once that is, on the same par, they will know that, okay, money is also, you can actually have some change even after buying things. And talking about buying things, food prices, President Tinubu wants to see them lower. But here's
Mm.
the kicker. Food producers are saying that cost of production is what needs to fall for that to be done. How can that be achieved?
Yeah, so I agree with farmers. I mean, there's no way you can, crash prices very fast without, bringing down cost of production. So you can't
Mm-hmm.
see food prices drop until all this, this input costs until they fall. For example, I gave an example of fertilizer now. If you look at the prices of fertilizer year to date, it's more than 40%. Also, some of the seeds that this farmer use, they are like up to 10%. Now, that is one side of the cost of production. Now, let's move to another side of the cost of production. We have insecurity in food producing regions. You see that some of these farmers, they actually
Yeah,
pay ransom to all these bandits just for them to be able to farm on their own
true.
farmland. That's actually also a part of cost of production. And because of this, you see that many farmers have abandoned their farm, they've abandoned cultivation. Now, apart from that, let's also had bad roads,
Ah,
high energy costs, and even extortion at some checkpoints. So this is where we are seeing price remains stubborn. So it's not a magic. It's not magic. It's not just about saying prices to crash. All this cost of production that's I said some of them now, all of them have to come down. So that is it.
I agree with you. I don't know how we will make that happen or how the government can assist in that one, but indeed, food production needs to be, there needs to be some sort of assistance. But let's look at the Monetary Policy Committee in Nigeria. Do you think that a further slowdown in inflation could prompt a rate cut this year?
Uh, well, that's a likelihood of us seeing a rate cut this year. So it's a two-way thing. It's either we
Mm,
see the CBN maintain a old stance, or on a worst case scenario,
hmm.
probably cut rates by 25 basis points. Like I said earlier on, our target for this year is 15%. We are still at 20%. So we still have kind of a long way to go. So
Okay.
cutting rates prematurely now, I mean, cutting rates
Would,
aggressively could
hmm.
reverse the gains and also weaken investor confidence. Now, apart from that, also, we know that the CBN are actually keeping these rates just to, keep foreign investors locked in Nigeria. Because, I mean, some of these, especially the portfolio investors, they're actually here because of interest rates, our high interest rates. So now cutting the interest rate drastically, I mean,
Will
all of a
drive them
sudden,
off.
it's just like that, it will drive them off. So for this
One,
year, I mean, we
yeah.
have September, November meeting. So it's either we see a hold in September, then 25 basis points cut in November. So that's it. Because
Well,
cutting rates just like that would send the wrong signal to the markets. Yeah.
mm. Oh well. That, like you said, we're still in the early. Well, I won't say we're still in early days because we're mid-September already. But let's just keep our fingers
Mhm.
crossed and see how things pan out before we can say, okay, there will be a cut.
Yeah.
There's no cut, but hey, still want to keep our head up. Well, some, although, have been arguing that the exchange rate is more impactful than the monetary policy rate. What's your take on that? Do you agree? Do you disagree? Or are you going to sit on the fence on this one?
Well, for like I earlier mentioned, for an import-dependent economy like Nigeria, I would say that the exchange rate is the primary transmission, the primary transmission channel for inflation.
Hmm.
Like like earlier mentioned, if the exchange rate, if the naira is very volatile, you see people panic buying dollars, panic selling, panic pricing their produce, and translate into an increase in inflation numbers. If the naira weakens, you see that transport costs would rise. The
Right.
inputs that manufacturers and also agriculture, the farmers in which they use would become expensive. You see that manufacturers would pay more for some of their inputs, and all of this would cascade into the prices that consumer would buy some of this produce. So I'm saying the MPR is not important, but it mainly affects demand through credit cost. And you see, is majorly those that borrow with this rate. You see, maybe the high net worth individuals, businesses, large businesses, and banks. So, like I said, when 60 to 70% of what we consume in Nigeria is tied to imports, so FX volatility, that's exchange rates,
Right.
it can overwhelm the effect of rate hike. So that is why stabilizing the naira has, dramatic impact on inflation. Compared to raising interest rates.
Okay. So, but what would you say is the impact of the NPR on the economy presently?
So the monetary policy rate, it sends a clear policy signal. Higher rates would help control inflation. That is by making credit expensive. It would discourage excessive borrowing, and most importantly, like I mentioned earlier, it would attract foreign inflows. High interest rates attract foreign inflows. But now it's important to note that there is a trade-off there. If your
Okay.
interest rate is high, it would slow business expansion. Some of these business that want to, maybe borrow money, they want to raise loan. You see that the cost of that loan would, rise. Would, it could limit investments in a weak economy. So that is the impact of MPR on Nigeria's economy. So rising rates, would help actually, but we should note that it won't fix our poor roads. It won't fix insecurity. It won't fix power shortages. So for us to unlock great economic growth in Nigeria, it's a multi-pronged approach. So fiscal
Okay.
reforms have to be there. Then the NPR, that's the central bank policy, has to be part of the play. Then we also have infrastructure investments, and that's talking to the structural part. So all these have to be in play for us to, unlock, for Nigeria to be able to unlock greater growth.
All right. And with that, we have come to the end of our conversation. But before I let you go, what's your outlook for inflation as we close out the year?
Well, we expect, as we've seen in the past months, so I
Mm.
expect inflation to continue easing, and, based off the rebasing and also the base year effects. But we might not see it as sharply as we've seen especially comparing July to August. We saw like 176 basis points decline. So currently we are at 20.12 now in August. That's at August. So I believe that we might not end it maybe at that 15% get, but something
Okay.
close to 15%. And this is if all other factors, like if the naira remains stable, food supply is held steady. And another factor that could affect the outlook for inflation is, the global risk. We have geopolitical tension, external shocks. Let me just, give it a summary like
Put
that.
it that
External
way.
shocks, also affect the outlook for inflation for this year.
All right. Thank you so much, Ikeoluwa, for all that insight that you shared this evening. So for uh anyone who's listening now wondering, okay, I need more insights, I need to have a one-on-one explanation, where do they reach out to you? On what social media platforms can they reach out to you for them to get more insights?
Okay, so they can reach out to me on LinkedIn. My LinkedIn is very active, Ikeoluwa Alabi, and also on Instagram, Lydia Delia. That's my ID, Lydia underscore Delia. So, but LinkedIn is very much active, Ikeoluwa Alabi.
All
Thank
right.
you.
All right, thank you so much. And Lagos, I'm sure you've gotten a whole lot of insights. You now understand that, okay, well, yes, this inflation is going down, but it's not in the sense that you think about it in, but it's also for you to get more insights and you know how to go about it. Just reach out to Ikeoluwa and she'll explain in maybe more understandable terms that you would be able to relate with. But there's so